I don't love you like I love you. Slow down. I don't love you like I love you. Do you know the song, Shabaf?
No.
Why are you so sad, man? Give me some energy. Fuck.
I'm
I don't
tired,
like
dude.
doing. Huh?
I'm tired, man.
We are all tired, man. But
Cool.
listen. Do you
Yeah.
remember going to school and listening to this teacher who was like, "Why the fuck am I doing this? So fucking sad. Life is bad." Eh? Do you want to learn from that bitch? No, of not. The fuck do you think you're low energy, motherfucker? You think I'm not tired, bitch? That's why I play music every time I start. So that you know what? Let's just take a second. Let's just take a second. Listen to this.
Yeah, we have wasted enough time already, sir.
Okay, Shavaf,
Yeah.
breathe.
Bro, we'll start, man.
Okay. Sorry, you seem like you're a sulky. What, you lost money or something in the market today?
No, no, no. I made a very good amount of money today. Like
Then why
crazy.
are you so? Tell me why. Tell me something. Why are you upset? What are you upset about?
I'm just tired, dude. And the other things you know about. So, yeah.
You not let these external things affect your internal workings.
Yeah.
But we are ready nonetheless. We can keep going.
So, yeah, let's give a start with the recap and let's get it started with.
Recap. We didn't learn like a lot of like technical shit yesterday. We learned the same thing that we learned previously. We learned about supply zones and we learned about, yeah, that's about it. We didn't really learn anything other than supply zones.
Okay. So, wait. Is my screen visible?
Yep.
Okay, cool. So let's go and duplicate this. Let's do one thing. Let's go to Forex. Let's go to gold itself. Let that thing keep running. Okay. So let's get practically started with how we look into demand zones, what happens in demand zones, how do we, which is a better demand and supply zones to plot, how do we see that growth of crypto wealth in seconds due to a simple iPhone mistake. Sad.
Sorry.
No, I just read one of the comments that said man loses rupees 4.9 crores worth of crypto wealth in seconds due to a simple iPhone mistake. It's sad for him. See, when we mark a demand, when we mark a demand or supply zone, we make sure that the demand and supply zone has, from that area, we have got an impulsive move from there, or say that we break a previous structure as well. All right. So to get started with, here, if you look at this area, we have broken the structure as well, the previous structure that was created. And then this was our last supply zone. this entire area, if we take, will be our supply zone. The other reason to mark a supply zone as such is because you can even refine it, go lower. You can just mark this as well. But then again, it's ideal that you mark this as well. But then you can take this. Then we'll be learning about refinements. Refinements as in how to make the supply or the demand zone even smaller, and find out better places for us to enter trades in the future. So
Awesome.
when we do as such, what we get, what the benefit we have is we get smaller stop losses. The most smaller stop losses we have, the better our trades can get. Even if you're risking the same amount of money, even if you have a smaller stop loss, but when you're targeting for when you're making money or have hitting a target, you're making pretty good amount of money. Like
Okay.
for example, I'll show you. Okay, this trade is also going well.
You just
Okay,
you just want to you just want to show us you're making money, no?
no, dude, I'm showing you an example, dude. Okay, so
This is an
basically,
ongoing trade.
yeah, it's an ongoing trade.
Holy fuck, man! You know, I'm so proud of you, Shabaf.
Thank you,
I'm
bro.
so proud of you.
Thank you.
Can you walk us through how you took this trade?
Yeah, sure. So basically, the market previously broke the structure over here in this area. That is why this line is over here. All right.
Okay.
When this was when this last structure was broken down, this was the last demand zone that it created that was not tested. That is that not mitigated. You
Mm.
see this demand zone? I
Yeah.
mean supply. I mean sorry, my bad. Sorry, supply zone. So
Yes.
from after this supply zone, there was no back mitigations towards it.
Okay.
Okay, so this is the supply zone that was being created, which was not tested. And then, as we were going down and creating lower structures in the market, we were also building liquidity in the market. Liquidity, as in the sense, liquidity means stop losses for the banks, where retail traders have their stop losses, like they short the markets from here, 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 because basically they are trading in trend lines. Okay,
Mm.
so these are called trend lines. When you mark from say from this to this week to this week or something like that, people trade in trend lines as well.
Mm.
Okay, so here when people are trading here, this is a trend line being formed. There's a line. So every time we go near it, we bounce back. So there are people who are shorting the market at every reversal from this point. So that means there are people who have their stop losses right above this. So that is liquidity for institutions and the banks. That is, they will want to take these positions out. Remember what I told you first. They will take the
Mm.
people, retail traders out first. Then they will start building their positions. From the supply
Mm.
zone, market fell down. From there, they push the market back up again, just to create the actual down move so that they can liquidate more positions and get more open positions for themselves and make more money by hitting stop losses as well. Okay, so this was the last untested supply zone. So when we approached the supply zone, I took a risk and basically at first I took a risk entry immediately when it took. I had a limit order. That is, I already had kept an order here that when the market came and touched this zone, at this point, at this point, it executed my trade. I got in the trade, and my stop loss was right above here at this point. So and after a while, you can see I took a stop loss over here at first. Then I waited for a while. Then I was seeing what is happening, how it is reacting to the supply zone. From there, I went to the smaller time frame. When I checked in 1 minute, over here again, we were making liquidity over here. We grabbed the liquidity and took out this last low. Again, when we did that, we created another small supply zone. Not a supply zone, basically. This is called an order block. We created an order block because of which we took out the last previous liquidity, and we took out lows as well. So when we came back to that zone, the order block zone, I kept another limit order right over here with the stop loss right above the order block. I entered the trade from there. This happened. And when the market took out this low, what I basically did was my stop loss, which was here, I moved my stop loss to my entry price. So even if the market had come all the way till here and took me out as well, I wouldn't lose anything on this trade because my stop loss at this point is at my entry price. So I'm not risking anything at all. Okay. And when we
Why don't we just keep always stop loss at our entry point so that we never lose money?
No, you can't, because see, as soon as you enter, you have to have a distance between your entry price and your stop loss, because there is a buffer space. If you keep it together, immediately as you enter, you'll exit the trade. That's pointless. You have to risk something to make money. You can't expect to not risk anything and
How
make
did you
money.
do it after then?
You can change the stop loss after you enter the trade in the broker or some whatever app you're using. It gives you a what do you say? It lets you change the stop loss. You can modify your stop loss later on.
Done. Okay.
Okay, so when we broke this level and we took out this low, I moved my stop loss from here till my entry. Then again, I was waiting. I was looking at this supply zone. Can you see? There was another supply zone that was made over here. The
Mm,
last up move before the down move before we took out this low as well.
mm,
Okay, again the same thing happened. We went down, we took out the low. When we touched back to the supply zone, we started moving down again. But then there were still orders that was yet to be executed.
mm,
Okay, so because of that, the market came again into the order block, tested it deeper in the order block, and then started pushing down again. And if you see this, it came here multiple times, tested, and it's been falling from there itself. Okay, so now at this point, when it came for the third time and started rejecting, then I didn't want to be in this trade anymore, even if it comes back again one more time, because at this point, this this supply zone or the order block has been tested multiple times here. So
mm.
again, if it comes one more time, it won't be as strong as it was for the first time. It was first or the even the second time. Usually, it's not very strong, but sometimes it is. Okay. So what I did was, with my stop loss, which was here at my entry, I moved my stop loss above this order block. So now even this is not literally nothing actually. I'm just making this much. Even if I lose, then I let the trade run. I like actually before it came here itself, I took out my partials over here. Partials as in if I suppose say I had entered with 100 quantity, and the market reached this low, and we took out this low right over here.
Mm,
So when we took out this low, what I did was I moved I mean, not move, sorry, I exited my positions. Like out of, suppose, say I had taken 100 positions in gold. Okay, 100 lots. So from that, for example, from 100 lots, I exited almost 75% of my positions. That is, whatever I made from here till here, I booked the profits of 75% and I got out. Now the rest 25%, I'm letting it run till here.
mm,
Got it? I'll show you another example of a trade I took in the
mm.
afternoon. I had posted it on Instagram.
Really?
Yeah, trade breakdown, this trade breakdown. So here also, again, if you see the same thing, this was a 15-minute supply zone. Okay, I'm really sorry for the slow net, guys. My Wi-Fi is kind of screwed up since the last couple of days. Not last couple of days, it's been a while now. So can you see this was the last supply zone, 15 minutes, last up move before the down move.
Mm,
Okay, even this zone is also valid, but then I had drawn multiple supply zones. This zone is not valid now, because see, if you see here, this zone was already tested. Can you see?
mm,
Wait. See, this zone was already tested. When we created
mm,
this order block, we came
mm,
back into the order block and then we started moving down. So now what
mm,
we are left with is this supply zone and this supply zone.
mm,
And this supply, and after this supply zone, we had taken out this low as well just before this, and then when I waited for a while, we took out this low as well. Okay, because people who took long positions here, they had their stop losses over here. So
mm,
the stop losses have been liquidated. All the positions have been liquidated. We took out this low. So when we came back to the supply zone, the 15-minute supply zone, and always remember, we do our analysis, like we mark our analysis in 15 minutes, 5 minutes, and see, I personally do that. Okay, it works the same in every time frame. If you're trading, if you're marking, if you're doing your analysis, say in 4 hour, you can take your entries in 15 minutes or 10 minutes or 5 minutes. I
What does
do
that
my
mean?
like time frames, different kind of time frames. There are different kind of see, this is a 1 minute time frame. Okay, you see so many candles here, right?
Mm.
This is a 2 minute time frame. So every 2 minutes, each candle is being formed. This is a 3 minute time frame. Now the candles are reducing. Can you see that?
Mm.
Now 4 minute, 5 minute, 6 minute. You can keep on going. Okay. I personally prefer to do my analysis like I do. I mark my supply and demand zones, look at it in the higher like 15 minutes time frames, and I take my entries in 1 or 2 minute time frames. Okay, so when you plot all the supply and demand zones, it's always suggested that you look in the higher time frame first, then you go to the lower time frames. So basically, this was my 15-minute supply zone, this entire area. Okay, and in
Mm.
15 minutes, this wasn't tested at all. You can see, right? Once it left, it never came back there. Once it started approaching to the supply zone, I was in 15 minutes till then. When once it started approaching to the supply zone, what I did was jumped to the lower time frame. I was watching it in the 1 minute time frame. Okay, so in the 1 minute time frame, here what we did was we moved to the supply zone. When we moved to the supply zone, we got a break of structure here, like a small change of. It's not a break of structure. You can call it change of character. Change of character, as in from being bullish, we have turned part bearish.
Mm.
Okay, we have not completely turned bearish yet. We have changed the character. Changed the character as in the character was bullish so far. We were making higher highs and higher lows. Now the character has changed to being bearish from being bullish.
Mm.
From being bullish. Okay, so the character has changed here. And right over here, we broke the low. Can you see? We took out the low here.
Mm.
When we took out the low, and when I checked in 1 minute time frame, this was the last up move before the down move, which was not tested. Can you see? It has no wicks around. You understand? You understand what wicks are, right?
Mm. The highest it could have gone and the lowest it could have
Yeah,
gone.
the whatever the
Not the
lines you
opening.
see around the body,
Mm.
up above and below the body. So
Correct.
there are no wicks inside this supply zone. I mean order block. Okay. So
Mm.
inside this order, it has never come and tested this order block. So when it came
Mm.
back to that, when it was approaching towards that, around this area, I put an order for 1953.22. My entry was 1953.22. So that was here. Sorry, yeah. My entry was here. Yeah.
Mm.
Okay. I had kept here and my stop loss was right above this zone.
Mm.
And then same thing. I was I wait, I was my I targeted, yeah. I targeted this low. This was the last wick. Can you see? Okay, there are multiple wicks as well, but then I was targeting this because after just below this is again a demand zone which wasn't tested. See, this is again a demand zone. Got it? Are you understanding, Saad?
Yeah, got it, got it, got it.
Okay, because from here we took out multiple highs and we started moving up. I could have targeted exactly at the demand zone as well, but then this was my actual plan, so I had to I executed my plan. And so below the wick was my target. So yeah, I exited right around here. But on the way, I was booking partial profits as well. As in, as it was breaking few lows and all that, I was booking some sort of profits as well.
Mm.
Okay, so you understood the concept behind how to see a supply zone and how to,
Done.
huh?
Done. I have no like the reason why I'm telling you I done is because I'm like I don't have any questions. Otherwise, I'll ask you 100 questions if I didn't
Yeah,
understand.
but did you understand?
Yeah, yeah, it's crystal clear. Anyone who's listening, I hope you are. If you have any questions, shoot. But I'm here. I'm. I think I have a basic understanding which can be then refined as we practice it on some accounts. Awesome.
Okay, so if this is our suppose say this is our 15-minute supply zone. Okay,
Mm,
we from here say the market was coming down. From here we made this supply zone, and then from there we broke the structure and we started going down. Okay, when we start approaching back to the supply zone again, and all this while it might take sometimes hours, sometimes days, sometimes minutes. All this time when you know this is your supply zone, you wait. 90% of trading is waiting for your best of
mm,
the best trades.
mm,
10% is executing everything you have in your head, or what you understand, what you learn, what your trade plan is. Got it?
mm,
So when it approaches back to the supply zone again, you wait. Suppose say this is your 15-minute supply zone. When it goes back to the supply zone, we go to a lower time frame. We look for entries in our trades in lower time frames. Okay. So in the higher time frame, we might be just going do this, and we might be going down. If you look in 15 minutes, you won't find
mm,
any entries, or you won't understand what exactly is happening. Because see, if I
mm,
show you the same trade here in 15 minutes, see, this was my supply zone, and in 15 minutes, if you see, you can't see a supply zone over here, right?
mm,
Okay, this was my smaller 2-minute supply zone, because of which I took a trade. If I waited to enter the trade in 15 minutes as well, I wouldn't understand anything. It's just a smallest that the structure is going down, took an impulsive up move, started going down again. You don't have a clearer idea of what is happening inside it.
mm.
Okay, so
Understood.
that's why we use multiple time frames. That is called multi time frame analysis. Okay, so in the 15 minutes, if the market is doing this, probably in the smaller time frame, what we might do is say in 15 minutes we are here. From here, I'll show you how a 2-minute or a 1-minute can do. We might be doing this. We approach here. We go a little deeper in the supply zone. We take out last low. Okay. Whatever the last low is, we take it out. We have to get the candle closing. The wicks as well, but I don't recommend doing that as of now. By with experience and later on in the later few months or something, you guys can start doing it, but not for now, because it can be risky as well if you don't know how to manage the trade when you are entering with wicks, just by say wicks break off structure or something like that. So once we take out this previous low, what we'll be creating is we'll create another supply zone over here, a smaller time frame supply zone, that is called an order block. This order block is the reason that we took out last low, because of which we took out the last low. Okay. Now, when we come back to the order block, suppose say this is our order block, we enter at the order block. Now, because we have more confirmations to enter the trade, we know, okay, we have multiple confirmations saying that we were in the supply zone, we broke the structure, we went down, we approached the structure again, we got another smaller time frame break of structure. And then from here, we go down, like it might go down more like this. But when you enter a trade, you enter here, you keep your stop loss here, you target the last low, and then get out. No matter what, if you see that going down more, greed might start kicking in. You might think you missed out. Doesn't matter. You had a plan, you executed the plan, you got out with the plan. That's what it matters. Then after that, it can anywhere in the
Man,
on the way. It might.
I was just thinking, like when you know the
Huh.
market is going low and you have, say, $1,000, and you're telling us we can't place a bet for more than what, ₹100. I'm just
$1,000 is
thinking,
no
like,
$10.
how do you control yourself? Because if I knew the market is like, if my analysis is telling me the market is going to fucking go low, I will bet the entire $1,000.
See, the thing is this, you have to learn this, you have to develop your psychology in the as you trade. And the first thing is you have to stick to your risk management. If you have to become a better trader, rule number one, always remember, stick to
It
your
doesn't
risk
matter how
management.
much money you can make as long as you make it consistently
Doesn't
over a
matter.
period of time.
It's about consistency. It's not about you make a home run at one shot. Say you made, you know that the market is going down for sure, and you put all your money in, and say you made money.
Hmm.
Okay, today. Tomorrow you do, tomorrow you might think the same thing, or you might think the market is going up and you might do the same, and you might lose money. The day after tomorrow it might continue. So the first day what you made, in the next 2 or 3 days you might end up losing the entire money and even more, because you're not managing your risk. For example, say
That's
that
gonna be so hard for me, man. That's gonna be
if
so
you're,
hard for me.
it's a game of, bro, it's a game of psychology and mindset, dude. You can't let anything screw it up. You basically have to trade like an emotionless robot. When you do that, that is when you become a better trader. It's this, right, bro, Aflak. It's all about discipline and consistency. It doesn't see. It
I
doesn't
think
matter. You make $700. What?
is it me or is it you that is getting stuck?
Backstage? Who's it?
Guys, is it me or is it
Guys,
Shavaf?
Sad, you.
Alright, give me a second. So we're learning Wyckoff now, right?
Still into demand and supply.
I know,
Okay.
I know, but like now, like we are getting into.
That's no, not today, tomorrow. Because bro, these things we have to be very very thorough. We have to know how to do this, because without knowing this, now we are learning part by part. If you have a little confusion, it's okay, because after we are done with all this, we are going to put all of this in at, like, we are going to combine all of this structure, demand supply zones, Wyckoff, how to make better entries, how to refine your entries, as in how to get smaller stop losses, so you can you can target, make a bigger target, say 1 is to 15, 1 is to 20, 1 is to 25. 1 is to 25 and all doesn't always work on Indian stocks. In forex it pretty much works, but give me a minute.
Say something.
Can you hear me?
Yes, perfect.
Okay, so all these things, you show some examples on chart as of what, bro? Examples of,
Demand supply zone. Can you build? Can we build a demand and supply
yeah,
zone?
yeah,
Give us a chart. Let us build it.
build a demand,
Let us
like
make
in the
supply zones and
charts.
demand zones. Yeah, yeah, yeah. Let us do it. And
Okay,
where would we take a
see, I
bet?
show you. You can't call it, see, don't call it a bet. First of all, stop calling it a bet. If you want to
Okay,
become a,
I'm gonna tell you what. Listen, listen, listen. I'm gonna tell you
because see,
what.
you're still
Can we
you're
do the
still in
Zoom?
the mode
Ajinkya,
of
can you give?
gambling, Sad, and I have been telling you before we started this thing.
Okay, I know, darling. I know.
We are
I'm just
not
kidding. I'm
gambling.
just kidding. I'm just kidding. So what we're
Yeah.
gonna do right now, Ajinkya, can you send me? Can you send a Zoom link or like a Gmeet link on the group so that I can come through that and Shavaf can open that and I am going to try to mark for
Yeah,
by
in
myself.
Zoom you will get that annotate shit or something like that, no? Which you, through which you
No,
can
no, I
mark.
can. I will screen share.
Okay. So when we look at demand and supply zones, basically, we have to see few things as well. Wait, okay, Sad, before that, there are some things called as imbalances. Okay.
Mm,
Imbalance basically, imbalance basically means the gap between the candle's body and the wick. So here we have a 15-minute supply zone over here.
mm. What is that? 15-minute supply zone basically means when the chart is 15 minutes
Yeah,
candles.
15 minutes. The chart is in 15 minutes. And
Mm,
this supply, because of this supply zone, we broke the previous structure as well.
mm,
Okay. And here you see there is a gap. Where did that go? Okay, so there is a gap between the this candle. Okay, see, if this is the last up candle, you can see the wick of this candle around
yeah,
here, the
yeah, yeah.
bottom
The
wick.
hammer,
Yeah, see, it's not a hammer, it's a doji.
doji, sir.
Okay, so there is a gap. Can you see there is a gap between this candle's
Can you zoom
bottom
in?
and this? Can you see there is a gap between this candle's lower wick and this candle's upper wick?
What?
There is a gap, as in there are no wicks. Here you can see if this is the body, there are wicks from both the sides.
Uh,
Get it? See, if
uh,
this is the body,
uh,
there is a wick of the previous candle that covers up the next candle's wick as well. Can you see?
uh.
Okay, but in here, there is nothing as such. Got it?
What do you mean? Fuck.
I'll tell you. So here again, I'll tell you. I'll show you some other example. Okay. Here, this candle has a wick below it, right?
Mm.
Can you see the wick?
Yeah,
See,
yeah. Above also it has a little bit. Chotu. Chotu. Very, very chotu.
yeah,
Yeah.
this wick. So the
Uh,
bottom of this wick. Okay, so
uh,
this will be our supply zone, right? If you are
uh,
just consider this area, don't ignore the
uh.
rest of the things. So if you are marking this here, this will be our supply zone.
Okay.
So the bottom candle, I mean the bottom wick of the supply zone to the impulsive candle, you should not consider that. The next candle to the impulsive candle,
Mm,
the top wick of that candle, that is
mm,
this. Can you
mm,
see?
mm.
That is supposed to be as close as possible, or just see if this is the zone. Suppose consider this is a supply zone. It has a wick. Then it went down. The next
Yeah.
wick went up so that it covered the gap between this at the bottom. Saad, can you see it?
No, I kind of lost you.
Okay, fine. Uh, I'll do this. Say if suppose say if we mark this area as our supply zone because this was the impulsive down candle, right?
Hmm.
Oh God, why is it doing like this? Okay, this was the impulsive down candle. So suppose say if this candle had a wick over here. Okay, wait,
Oh,
I don't know why is it doing like this. Okay, wait, bro, something is really wrong. Okay, wait, I'll just mark it aside. Okay, if
ah,
just consider it this thing to be on the center of it. Okay,
ah,
so if this has the wick and this candle, ignore this candle for now.
ah.
Okay, so even this candle will have a wick, right? Suppose this candle has a wick.
Hmm.
Can you see if this candle closed, this candle's top is here, and this candle closed over here, and this candle's bottom is here, right?
Hmm.
So the gap between this candle's lower wick to the next to next candle's upper wick,
Hmm.
excluding the impulsive candle,
Hmm.
because wicks are supposed to be covered sometimes like at least like this. The wick is supposed to cover a certain amount of space.
Hmm.
Okay, for example, see here, if you see this candle, it created a body,
Hmm.
it has a wick,
Hmm.
the wick is right over here.
Hmm.
Ignore this candle. This
Hmm.
candle opened here,
Hmm.
went till here, then went down till here, closed here. It created a wick right over here.
Hmm.
Okay. So this suppose considering this is the impulsive candle, if you see properly, there is a gap between these two candles. See, there are no wicks here again.
Hmm.
The wicks are supposed to cover. There are no the gaps. There shouldn't be gaps between either sides of the candle when it comes to wick. The wicks are supposed to just cover, pass through, or be. Got it? Am I
Got
clear,
it.
or are you
Got
still
it.
dreaming?
Got it. Got it. I'm got it. Got it.
Am I
Got it.
clear,
Got it.
Saad?
Yeah. Got it. Got it. Got it,
You're
bro.
lagging. You're lagging. You're lagging. Yeah, you're lagging. I think you're lagging. Saad, you're lagging.
Got it, got it.
Okay. So this certain area between this candle's wick and this candle's wick, the area, body area where there are no wicks is called an imbalance. Okay. Suppose if you see here, I'll show you examples. See this candle, it closed over here. This candle
Mm.
went down. The next candle,
Mm.
the next candle opened here, made a wick till here so that there is no space, there is no imbalance between this candle's wick and this candle's body. There is no gap left. So if you can see here again, this candle closed, like went till here, closed here, and this candle went up till here, right? So if you consider only this part of the candle, only this area, so there is a space of this much where the wick hasn't moved yet, right? In the top
Uh,
of the next body's candle. For example,
mm.
okay, are you understanding?
You got it, got it.
So the next candle, when it opened, it went down till here, so that the remaining area, which was unfilled, which had an imbalance, it had to cover the imbalance. It went right. See, if you see here, it went right till the wick of this, just below that, and then it's moved up again.
Mm.
So when there is a gap as such, see, if this candle closed here, it went till here. The next candle, it made a wick over here. There is a
Mm.
space of, there are no wicks around left or right of this candle. Can you see?
Mm.
It's just a empty space.
Mm.
So this entire empty space is called an imbalance.
Mm. Got it.
Okay. So when we mark supply zones, we look for imbalance as well. So for okay, okay, I'll show you. This is for the same zone. I mean supply zone. Okay. This is a supply zone. So from the supply zone, we had down. What happened so far? That the people who had orders at certain areas, suppose at these all these points, these decimal points and all these, their orders were getting because of those orders. Upon those orders, the market is pushed back against as well as where the orders are placed. Okay. So here again,
I thought the lag was on my end. I didn't want to say anything because I thought he'll yell at me. I was like so scared to say anything. And I'm like, oh my god, this bitch. I thought I was lagging again. I was like, oh shit.
okay, I'm back.
Uh,
Okay.
hmm.
So when we left from this candle here, this was the
Your
last wick.
screen.
Okay, I'm sorry. I'm sorry, guys. I'm really sorry. As I told you, I have a really bad problem going on with my internet, and I think it's because of the area where I have my setup right now, Sad. Because the router is way too far,
Get the router closer, no?
bro. The router is in the hall.
Huh, move it.
I have to keep it. I have to disconnect it and all. There's some that Ethernet wire as well. I have to find the socket for that in my room. and then do it. Okay, so coming back, I'll do that today and I'll get it fixed anyway. So coming back, so it's here there was,
Imbalance.
yeah, there was an imbalance. Can you see?
Yes.
This is the 50% of the imbalance.
Mm.
Okay, sometimes what we do is the market does is it comes down. Okay, and always remember, they if the supply zones are better when there is an imbalance around that supply zone. When like this one, got it? Because see, if there was an imbalance, we went back, we tested the imbalance and the supply zone, and then you can see the move down.
Mm.
Okay,
But why is the
so
supply
this
zone so big?
not so big now. And anyway,
No, but isn't supply zone supposed to be one of the red candles and then you just
this is the
उसका
last up move before the down move in 15 minutes.
हाँ,
If
but
you
you're
see,
taking two candles. वो second candle का wick you're taking and first candle का
yeah,
down you're taking.
I'll get there. I'll get there. I'll tell you why.
You
I'll tell you why.
don't do shit like this without telling us why you did that, okay? Oh, sorry, go ahead. No, because till now you told us supply zone
You want
candle
me to
before.
jump on things, or you want me to take it
No,
step
but
by
then
step?
you do shit like this. I'm like, oh, what the fuck is that so big? And I'm curious. Sorry.
It's okay. Okay. So when there is an imbalance, we came back, we filled the 50% of the imbalance, touched the 50%, we rejected a little, we went to the supply zone. That means we cleared off all the imbalances right here. As in, whoever had orders over right here, 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 here at all these specific points, their orders are filled already.
Mm.
Okay. So we went back to the supply zone. We tested the supply zone. We filled in the imbalance, and then we moved down. So when there is a order supply zone, wait, I'll move it right here. Okay, if this is a supply zone, and say this is a huge imbalance candle,
Mhm.
market. Okay, why am I working? Sorry. See, this is a huge imbalance candle,
Uh,
and we have say imbalance over here, and that this makes this will be our order block.
what is an order block?
So inside the supply zone, the smaller zone what we create, right? I told you when we go to the approach the supply zone, we wait for confirmation. Suppose this, I
You know,
showed you
you
an
didn't tell us that. You
I
didn't tell
showed
us
you an
that.
example.
No, you didn't. I promise you, I'm paying attention. I don't miss out. Like if I know what I don't pay
Afla,
out in the end.
did I show you how did I
No,
how did I mark the order block or not?
no. Order
Afla,
block, you haven't. Order, fuck you. Order, I don't even know what order block means.
and yesterday I have explained supply zones, order blocks, everything. Don't say no,
Supply
sir.
zones, yes. Order block, no.
I Okay, let's see from the comments. Let's see who says yes, who says no. Come on. Go to hell, Saad. You're not
Hey,
paying
fuck off, a
attention.
flug. You didn't. What is an order block?
Bro, I'll show you another example. God, Saad.
Please tell me what an order block is. What does that mean?
I'm showing you what an order block is. Have some patience, will you? See, everybody, two guys are saying yes. Okay, so this was a 15-minute supply zone, right?
Uh,
When we approached to the supply zone, we broke the structure again. Here, again, we created this small zone. I showed you this? This is an order block. This smaller supply zone that we create inside the major, the higher time frame supply zone is an order block.
okay.
Got it?
Okay.
Write it down and read it 10 times so that tomorrow you don't say that I didn't tell it again.
Fuck off.
No
So
need.
supply zone is a higher time frame, and then when you come into the lower time frame, you build another supply zone within that supply zone. That's the order block.
Yeah.
What does order block exactly mean?
Order block is the area from where we get again the same thing. Supply zone, we get an impulsive move. Order block is the smaller time frame. Maybe you are taking, I don't stop. I know. I have to give. He wants an idea of everything right now. So I'll take it. I'll take it a little slow as well. So
No,
order
no, no.
block.
It's not about that. I just want to know, like, for example,
Yeah.
what
Okay.
is the meaning when you say order block? What is it that you
Okay.
mean when you say order block? I know
See,
what you're
order
showing.
block. see, you understood this area is called the order block, right? This area,
Huh.
I
I
okay.
know that. What
This
does it
this is
mean to
called
have an
an
order
order
block?
block because from the 15-minute supply zone, I mean, sorry, this was the major higher time for 2-minute supply zone.
Hmm.
Okay, in the 2-minute supply zone, when we approach there, and there we don't blindly enter at times. We can, but it's a risk entry. I did as
Hmm.
well. I got taken out. I made a loss here.
Hmm.
Then the next trade, I entered again with more confirmations. This was a risk entry because there is no proper confirmations to the trade as such that it will go down for sure.
Hmm.
When we approach a supply zone and then break the previous structure in a smaller time frame, here we
Hmm.
broke the structure, we took out liquidity. This zone is called the order block because this is the area from where the institutions punch their orders as well to push it down again.
That's what I was asking.
Yeah, so that is what we call as an order block. Just a minute, guys, I didn't see my trade. Where did it reach? Okay, just give me a minute. Where is my phone? Okay, cool.
Hmm. So order block is basically a supply zone within the supply zone when it's broken by a lower time frame.
Yeah, that is where we look. See, you can, what do you say? Your order block is, yeah, you are right. But again, order block is something that where the institutions are punching their orders again to confirm that they are pushing the market down or to the specific direction, not generally to down. You can see order blocks in demand zones as well.
So it's just
Suppose,
basically order confirmation within the supply zone as a sub supply zone in order for us to
yes,
kind
I'll
of
show you an example. Like what? Okay,
no, no,
if
I kind of
this is our demand zone. Okay, yeah, that's fine. That's fine. Now you go. Now you go and do this. Try spotting yourself on the chart. You'll be more confused. That's why I'm making it more and more clearer to you. And I'm 100% sure you'll be confused because it will get confusing. Of course, it will get confusing. Okay. Suppose say this is our 15-minute supply zone. Okay. Market from here, say in 15 minutes, we pushed up. So now in the lower time frame substructure, the market will come back. Okay. It approaches back. When we tap into the demand zone, that is mitigation of that, we break the structure again over here. Okay, in a smaller time frame. When we do that, we might leave an order block or a smaller demand zone around in this area. So when the market comes back here again to this, that is when we take an entry with confirmation. It necessarily doesn't mean it will be here. Sometimes it can come lower or maybe do this as well. Say from here, it might go till here, create break the structure over here, create the order block here in this area. Then when we come back and tap into it is when we are expecting the market to move up higher again, possibly take out these highs. Got it?
Hmm.
So this is where demand zone and market structure plays an important role together combined. So here, suppose say we were going down, and at this point we took out the structure. That is why we mark this as a demand zone, right?
Hmm.
Because we took out the previous structure in 15 minutes, higher time frame. And it's always suggested that you look for all these in the higher time frame because higher time frame break of structures and all that has more value to it, more power to it. Get it? So it's always recommended that you look the main structure in higher time frame. Like I told you in the beginning,
So you make your supply zones and demand zones in the higher time frame. Come back and make your order blocks in the lower time frame before you place an order.
yeah. Okay, so now let's leave the placing the order part. So now if the market is going down, we broke the structure. As of now, the structure was bearish until here.
Mm,
From here, we took out the structure. What are we now?
mm. Bullish.
So the last down move here before the up move is our demand zone,
Demand
right?
zone.
So when we mark to that demand zone, here we might do all of this crap as well. But what I personally do is when I see a zone as such, I wait. We can keep alerts in the market as well. Like you don't have to time frame you suggest us to do our homework. Yeah, yeah, bro, I'll give that. So I we can keep alerts there. As in, suppose see here, I wanted to enter my trade over here. Okay. When the market went down, I wasn't sitting in front of it and waiting all the time. I have just put an alert, as in see, I keep an alert. You can see a yellow light, orange light over here, an indicator. So when the market approaches back to this level, it gives me an alert. And you have heard it, Sad. The other day when you were here, you heard that ring. You remember?
Yeah.
So it gives me an alert. That is when I come back and sit in front of my screen again. I see what is happening. Okay, so what we do is it might take a long time. Sometimes it might take few minutes, sometimes few hours. We keep an alert or we wait for the market to come back, approach to our demand zone. And we are not chasing the market, as in if the market is going up like this, we are not placing entries here, 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 and all random entries or taking random trades because we are not chasing the market. We are following the footprints of institutions and we are trading along with them. So we have to make sure we are getting the best of the best trades when we are entering or we don't trade at all. It's okay for us to wait, then take random entries or take trades which we are risking 1:1, 1:2. I don't, that's, see, everybody have their own perspective. My personal idea is I don't see a lot of, say, profits, like huge profits always coming out of 1:1, 1:2 at least. Like even I used to trade like that before. And back then, 1:1 with 1:2, I used to have a win rate of 75, 70%, 78% as well. But then when I moved to SMC, my win rate reduced. So when I moved to SMC, my win rate reduced a little because our entries are tight, our stop losses are tight. Us being taken out, chances are a little high, but when you make, what you lose is literally nothing. Literally nothing. Trust me when I say this, you won't even care what you have lost by the kind of trades you make when you make. Okay. And that's why we don't chase. We wait for the market to approach back to our demand zone. And this comes yesterday. You remember I was telling there are institutions placing orders everywhere to liquidate more positions. And it's them causing this move up. Okay. And it's them again pushing the market down back here because suppose say that they had uh, 1 lakh orders placed over here. Okay. They wanted to enter 1 lakh quantity here.
Mm.
When the market when they tapped into here, but there were no enough orders left in the market for them to execute their 1 lakh orders. Obviously it is, I'm giving you an example, get an idea of it. Okay, say there are not enough open orders left for them to execute their orders that they want. So what they do is they fill in whatever, suppose out of say 1 lakh, 50,000 is executed. Like they got orders, their orders are placed here for 50,000. Okay.
Mm.
And they push the market up here. So every stop loss over here is being taken out.
Mm.
So every stop losses is being taken out. All the people who have shorted here, their money is being transferred to the banks.
Mm.
Along with them, their positions which they were short on is now open because their stop losses are hit. They are not in the trade anymore. So their positions which they were in is open to trade right now. Right? So what they do is they push the market all the way up till here. When they reach here, they themselves cause this down move again. Okay. So that Now all the stop losses which have been taken out and the orders which are open, they can fill those orders back in at this point. The remaining 70,000 orders which were left, now they will want to get it back to here to fill in those 70,000 orders so that they can push it even more higher. So they get it down all the way till here. They are the ones who is getting it down. So at this point, this position, when it reaches here, is break even. Is literally 0 0. But they have 70,000 more orders to right now to fill in, and they have the open orders of the people whose stop losses are hit. So here they fill in those remaining 70,000 orders, and then they start pushing the market up. So when the market is being pushed up again, the position which they shorted the market here, the profit is reducing, right? But here at the same time, they want more positions to build in, open positions. So they will keep the positions here with themselves so that they don't have to face a problem of lack of positions, so that they have to push the market down to push it up again. Got it?
Awesome.
So when they
Got it.
push the market up here, say they get it over here, they break the structure, they make a demand, like the demand zone is being created. We enter in the demand zone, and then they start pushing the market all the way up. So now this 30,000 and this 70,000, which they had
Mm.
initially executed from here, everything is in profit for them.
Mm.
So the position which they shorted from here is at break even here, right? Because they shorted here, the market went back to where they shorted it from.
Mm.
So this break even position, they exit at 0 0.
Mm.
They push the market down again a little, so that the break even position which they exited, that also they can accumulate themselves. Say they had shorted another 1 lakh from here. So now when
Mm.
they exited break even here, that 1 lakh is still open. They immediately enter that 1 lakh short position, they cover it up to a long position. And then from here, we test that remaining orders is being executed, and boom.
Awesome.
Got the idea,
But short
ideology
is
of
long,
how
long
to,
is short. Where you were saying long is actually short, and short is actually long.
as in,
When they're going down, they're shorting. Nah, why will they short when it's going up?
no, they are not shorting. They're not shorting here. When the market reached here, this was the shorting position. They shorted
Ah,
it here so that they can get the market back to here, so that they can fill in the 70,000 remaining
this is
orders.
where they're going long.
Yeah, from this is where they actually want the long positions to be initiated.
That's what I was saying.
Okay, they, because previously their 30,000 only was filled. Almost
Fair
70%
enough.
of their positions are left to be filled. So they are making more money on that 70% than this 30%. If you, because their
Yeah, yeah.
majority of the positions are not filled yet. They have the money to push it down again, so that initially they pushed it up so that they they get enough stop losses taken out and positions created for themselves to go long again. Am I
Makes
clear to
sense.
everybody watching this right now?
Yeah.
So you got the ideology of how the market structure you can combine with
You got
demand and
it.
supply zones, and how
Got it.
demand.
Got it.
Okay, this is just step one and step two.
Mm.
We are
Step three
combining both.
tomorrow.
We are combining both of these now. Then we'll start step three. Then once we are done with step three, we'll combine step one, two, three together. This is the only way you can get better. You hit your head with your hand. You hit your head on the wall. I don't care. I don't care, Zad. Hit it on the wall. I don't care. This is how we are going to go about it. Okay, and this is the same thing for a supply zone as well. Get it? Like it comes down, creates blah 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 blah. Got it? Is this smart money, smart saving concept? This is not smart saving concept. This is called smart money concept.
Q&A time. If you guys don't have Q&A, we'll bounce. Please don't have Q&A. Please don't have questions. Please, please no questions. Please no questions.
And there are we have to learn about how imbalances work near demand and supply zone and all that we'll be doing tomorrow. I think tomorrow will be the
And
last
we
day.
do not have any questions.
Yeah, we do not have any questions. No Q&A.
Fucking hell, dude.
Give our homework. Okay, so go to Euro USD. find supply and demand zones in 4 hours and find the order blocks within the supply zone or the demand zone in 15 minutes and send me the screenshot.
Good homework. I like that. Can you send? Can
Okay.
Jinky? Can you just put that link in the description so that they can go to that fucking link?
Wait.
Can you put it in the chat? Show off,
I
please.
said, yeah, I send you the link of Euro USD chart itself. I sent to the team. Hmm. Can we have practical classes daily on demo accounts and applications of concepts we have taught this? See, we can. It's not about having practical classes right now because we can't rush into things, right? Because this is not even this is not even 20% of what we actually have to implement in total. What we have to learn, not even 10-20%. There's a long way to go. There are a lot of things. The reason I asked you to go ahead with demo accounts yesterday is because I thought you had an idea of things. But if you have an idea of how to do this, then bro, you can start implementing all these things together and then start with your demo account. But we personally won't be start doing practical demo account trading until and unless we finish one by one all that, and we can combine all of it and then start. Because if you are going to start demo account trading right now without having the entire concept, without understanding the entire concept, we'll be missing out a lot of things, and then there will be a lot of errors from your end, not from my end, because I know what to do. You guys are still learning what to do, so there will be a lot of errors coming out from your end as well.
It's
You might
telling
make a
us we
lot of
can't
mistakes.
log in. It's telling we need to log in. Give me your account details.
Log in what?
It's showing that I can't enter. Need to log in or something.
Bro, you just log in with your Google account.
Give me your account.
I'm not giving you my account. Make your own account. You can use the trial account for free as well. I have a paid version. You use the free one. That's enough. And say hi to Rahim.
Oh, what the fuck, man, you little bitch.
Rahim, he wants us to give our paid trading view account for him to free. What to do?
Rahim. 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 Rahim.
Rahim.
Rahim. Rahim.
You can see his
Rahim.
hand.
Rahim. Rahim.
Yeah. Tell me.
Are you Cinderella? What did you learn today?
Rahim, look at the gold. Look at the gold thread.
What did you learn
Fuck
today,
off.
son?
Fuck
What
off.
did you
Look at my
think?
Demands are
gold trade. Look at my
Yeah,
gold.
exactly.
Alright, man. Thank you so much. For everyone here, like,
We learned
karo,
about demand and supply zones,
like,
mitigations,
karo,
order
talk,
blocks.
and also like, listen. Don't be selfish about this. Like, you need to bring in a friend. Tell your people, like, be like, bro, मैं सीख रहा है, तुम भी आके सीखने का. Like, just get one more person, one for all and all for one. See you guys soon. And yeah, that's about it. Fuck off. Like, share, subscribe,
Yeah.
motherfuckers. CTA, please, Shavaf.
Like, share, subscribe, and press the bell icon. That's all.
Okay. Ganti bajao, mother chod. Bye bye. Bye bye. Bye.